Thank you, Mark, and hello from London. So after the rich number of both weekly and monthly key reversals found last time, we've moved on in this broadcast to a more regular, if interesting, series of technical patterns found at the end of last week. And we've had key reversals up, weekly key reversals up, in US dollar, Chilean peso, and US dollar against the Turkish lira. This last one is interesting because it is, oddly, a not too uncommon one. An immediate countering weekly key reversal. This does what it says on the tin. It counters the previous week's weekly key reversal down with a weekly key reversal up, and can be seen as a strong level of indecision in this market. That is not just intraday, nor even interday, but extends to a far larger time frame, the weekly level. Indeed, if this market were to move up between now and the end of August, say over 880 even, and to close on the last day of the month over 871, something that may be entirely possible given what's been happening, then would have built up enough presence and action to make it a monthly key reversal up. So this is one worth watching just for that. Next one is US dollar against the Philippine peso. Another weekly key reversal up. In this pair, there is a lot more going on than just the weekly action. There's been enough action over June, July, and now August to set up some large potential patterns. We've not had this much action here since late 2019 and going into 2020. The action here is evocative of two possible scenarios. The first is of a topping action with the market tipping over and dropping down through the August low at 49.5 all the way down to the long moving average, currently 48.5. The second is more ominous on the upside. Could the rising action throughout June and early July be a flagpole, with late July and August, the flag, in a bull flag formation? And there's a question mark on that. It has certainly been a wild ride, and I suspect it's not over yet. So watch this one carefully. Next is stock indexes and stock index futures. There was a weekly key reversal up last week in the Dow Jones stock index, but not in either the Nasdaq Composite or the Nasdaq 100, nor the UK FTSE stock index futures, the German DAX futures, or the French CAC 40 futures. Now, in the E-mini S&P futures, they came close but didn't quite manage it. In the metals, well, in the precious we had a weekly key reversal down in spot silver, but not in gold, nor platinum, nor palladium. In the base metals we had a weekly key reversal down in LME 3-month lead, but not in anything else. Okay, now over to fixed income. We had a weekly key reversal down in the UK gilt futures, but not in German bonds nor US T-bonds. As you can see by now, we've had interesting patterns in stock indexes and commodities, but they have not been replicated nor confirmed elsewhere in other markets. We seem to just have a few sporadically sprinkled about here and there. Well, not so in these next two. There have been weekly key reversals up in both New York and London sugar futures. They both fall in line with previously mentioned actions in my weekly sugar videos. The latter, that's London sugar futures, is especially interesting as it helps step up quite a way towards a double bottom target in the 495 area that I previously highlighted. Finally, an unusual but interesting one. It is also one of the easiest ones not to see. It is a weekly key reversal up in EEX butter futures. What is interesting about this one is it shares the same quality as US dollar against the Turkish lira. It is an immediate countering weekly key reversal up, if only just, and is therefore, to me, indicative of indecision that is manifest not just on a daily scale, but on a longer term weekly scale at the very least. It actually looks like the market is caught in between supports and resistances. Below we have the combined November 2019 high at Euros 39.05 per metric ton, along with the slowly rising neckline currently at 39.10 at the moment. Meanwhile, on top we have the slowly declining short medium moving average, currently 40.39, and the medium moving average, currently 40.63, as well as the neckline from the 2016-2019 head and shoulders top. Thus, it seems the market is stalking between supports and resistances like some sort of caged animal that is none too happy about its confinement. That about covers it for this week. I'm always happy to share my videos, various chances, and answer any questions that anyone who's interested. With that, I'll finish this section from London. I hope you found these comments useful.